Some people use debt to make themselves richer, while most people use debt to make their banker richer. I'm not an advocate for debt, but this is such an important concept to understand if you ever want to become wealthy. Let's start with an example. Elon Musk uses debt to live a billion-dollar lifestyle and not pay a single penny in taxes. And the reason why he's able to do that is because he's not paid with a salary, because you are taxed on your income. And if you get a salary, money deposited into your bank account, you now have a taxable income that you have to pay taxes on. So what he did is something different. When he was building Tesla, he negotiated something different. Instead of being paid in a salary, he said, pay me in stock options. A stock option gives you the right to buy shares in a company. In this case, he had the option to buy shares in the Tesla stock, and the stock options adjusted for stock splits said that you have the ability to buy Tesla stock at $350 a share. So if Tesla goes up to $500 a share, he can exercise the stock option, buy it for $350, sell it for $500, and make $150 of profit for each share that he owns immediately. If Tesla stock goes up to $1,000 a share, same thing. He can buy it for $350, sell it for $1,000, and make that $650 of profit for every share that he owns. Now, you might be wondering, well, how many shares does he actually own? He negotiated 20 million shares of Tesla at the $350 stock option price. Now, take a look at this. The Tesla stock goes up to, let's just say, $1,000 a share. That means for every share, he has essentially made $650. And if he owns 20 million of them, that means he has effectively $13 billion of wealth. But remember, this isn't money in his bank account. This is wealth he has access to. In order for Elon Musk to actually have this $13 billion, he has to exercise the stock options, meaning he has to buy the stock at $350 and then immediately sell it for $1,000. But the problem with that is when he does that, he's going to have an income and now he has a tax bill. Not to mention he's also sold the stock. This is where Elon Musk does something different. He says, I have these 20 million stock options that are worth $13 billion. Again, if I sell this, I have an income which I have to pay tax on. So instead of having a taxable income, how about I go to the bank and I say, hey bank, I have this asset under my control. These 20 million shares of the Tesla stock worth $10, $13 billion, whatever the stock price is today. How about you give me a loan for, let's call it $1 billion. No bank is going to say no because they know that he has the collateral and the ability to pay. So what happens? Now banks give him that $1 billion and now he lives off of that $1 billion. And now he just has to pay interest back to the bank. But here's the interesting part. That $1 billion that he got from the bank, that debt, it's not taxable because it's debt. When you go out and get a loan to buy a house, you don't pay taxes on it because it's not your money, it's a loan. When you do a cash out refinance, it's not taxable because it's a loan. And this is where things can really start to get interesting, because the next question you're going to have is, well, how in the world does Elon actually pay back that debt? Because the bank is going to want that money back, especially if he doesn't have a salary. And the way that Elon Musk and many other wealthy people who are doing this think about it is they say, okay, I have these assets that are worth $13 billion when my stock is worth $1,000 a share, but when my stock is now going to be worth $2,000 a share, now all I got to do is do a refinance. I can take out $2 billion from the bank at this time, pay this original loan off, and now I have more cash. So it's the game of working to increase the stock's value. That way we can borrow more money and then pay back and pay off the original debts. Of course, this comes with a risk, because if the stock value crashes or if the stock goes bankrupt, well, now you have these billions of dollars of loans with no collateral, who really the person that's going to suffer at that point is the bank, because now the bank has lost billions of dollars with no way of getting that money back because the collateral is gone. This is a game that wealthy people are playing. They're using debt, that way you can avoid taxes, but they're also using debt to not sell assets, that way they can continue growing the value of their assets. So using debt to buy assets and using debts to avoid taxes. This is what wealthy people are doing, and it works for some people. The mistake that so many people make when they try to do this is they're doing the same game just to make their banker richer instead of making themselves richer. Now, again, if you are an investor or you want to become an investor, I want to remind you that my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we break down what's happening in things like the economy, housing, stocks, crypto, and the global markets into a fun, witty, and easy to read newsletter. We have hundreds of thousands of subscribers that are reading Market Briefs every morning, and when you join Market Briefs, you'll also get my investing masterclass as a bonus, where I'll walk you through how you can get started as an investor and how you can find hidden investment opportunities before everybody else. This is completely free, so if you want to get the investing masterclass plus Market Briefs all for free, all you have to do is click the link down in the description below. What the majority of people are doing is they say, I have $50,000 a year of income, and banks are willing to lend me money. That way now I can have an additional $50,000 of debt, which means I can live a $100,000 a year lifestyle because I can drive a nicer car, I can wear better clothes, I can go on fancier vacations, I can live in a bigger home because banks will give me that money. And now you are going to work to get paid, not to make yourself richer, but to keep paying back your debt. You're going to work to pay your bills, and then you got to pay the bank. And then when you have any money left over, you can use it to save and invest, which for most people is nothing. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.